Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 4th, and Happy New Year to everyone in the room. Great to be back, and there is so much to talk about to start off the year. But first, hope everyone had an awesome holiday. And as we kick off the year, we have so much that we are tracking from a price action standpoint, from a geopolitical standpoint. There's a lot on the menu. So going to do a quick run through today of just a couple of trades. I don't have that much as I just get the gears looped up here again. We'll take a quick look at where we stand on the DXY to start off the year, euro, sterling, and gold, the updates I gave you yesterday. But it does warrant taking a little bit of a step back and checking out some longer term weekly charts, really prominent moves, especially in dollar yen. Dollar CAD, I don't really like where we're at now, but I just want to take a look at the longer term prospects again at a decent pivot that we could play off of possibly in the weeks ahead, and oil. Okay. Any other questions or trade setups? As always, we'll keep this one short today, but feel free to throw them on the message board at any time. Here's what the dollar looked like in our last update back on November 22nd. The weekly chart is basically what we need to focus on here. We labeled a massive area of resistance that we were looking for. Back then, it was right around this 96 handle, 96.10 to 96.50. We've choked that up just a bit. I'll show what we're looking at now, but the area of confluence was very apparent. And this was into the close of November, okay? Here's the chart from last night. Literally into the close of November, throughout the whole month of December, all we did is grind into this resistance zone. Again, longer term pitchfork resistance. The 2020 objective yearly open. Got rid of that 50% retracement. I'm more focused on the high close for the year, okay? Not the high week close, the weekly high close, which was 96.67. So 96.67, 96.50, you're looking at a 17 pip range of critical resistance here for the DXY right into the start of the year. What are the prospects for the dollar moving into this year? Last year, guys, we saw a rally of what was it, close to 6%, 7.5% almost. Okay, into the highs. We closed at the end of the day with 6.3 into the close of the year. Massive rally. Okay, granted, we had a huge decline in 2020, but this is markets pricing in that we're going to get some hikes. Markets pricing in the end of QE essentially, and heading into the start of the year, those tailwinds I think start to become a little bit more static, and it's going to need something. It's going to need something big, in my humble opinion, to clear this 96.67, 96.50 level. So right into the start of the year, guys, right into the start of the month, I am very weary and looking for some sort of pivot, some sort of reaction, inflection off this rally here into the start of the week and the year into 96.50s. Here's what it looks like on the daily chart. So even here, at its face, last month's opening range remains preserved. We never got out of it. There's a little bit of a cue there that we can look at. Also, we did see multiple daily close. I think it was 4 daily closes above that key region. But again, couldn't close the year there, couldn't close the month there. This is the same slope we were following off the May, June lows. That means we're at resistance right now, looking for inflection. Near-term support right at the monthly open comes right ahead of that 2019 low day close. That's 95.55. I know that's a ways away from where we are now, but that's the risk. And we're on hold. We're on hold to see what kind of reaction we get off this region. Also looking at the momentum profile, it bears noting that throughout the course of this rally, we have continued to maintain sort of a 40 support. That would be a change in behavior and momentum, something we're looking at early in the month, early in the year, if we are going to get a decent pullback. All things held constant. I want to take you back to that weekly chart. All things held constant, even if we were to get a massive dollar correction to start off 2022. 95.15 support, bullish invalidation, 94.47, 94.65. So that is to say there's room, okay, if we do get a more sizable pullback, it doesn't upset the broader dollar uptrend more than more likely than not, the pullback would be received as a pullback within, again, that broader advance off last year's low. So if that story holds true, it means looking for something here early in the week, like I said, early in the month. Topside resistance 97, essentially 96, 98 is the August 2018 high, decent pivot in price, and that converges on the upper parallel. So this is your sort of breakout zone that would open up that 97.70 level, which is a 618 retracement of decline. Huge, huge level. So looking for inflection, wouldn't be too surprised. We do get a little bit of a dollar pullback. Maybe we get to stretch into 97 first, but right here, right now, we're looking for an inflection right at the 2020 yearly open, the 618 of the drop, 96.47, 96.50. Here's what it looks like on the intraday chart. Okay, some real tight price action there. I think yesterday I gave you the 4 hour just to kind of clean things up here, right? But anyway you slice it, even if this is some sort of bull flag and we're going to break higher, it's still going to be that 97 that needs to clear the way, right? Here's last month, the January range, or the December, range heading into the start of the month. So even if we rally into this level, be weary. Inflection off one of these two levels, ultimately a larger pullback would have us in a much more advantageous position, right, to try to play alongside. All right, any questions on DXY? Moving right along, let's take a quick look at Euro. Similar scenario, DXY at resistance, Euro right at support. Two levels I wanted to highlight on the Euro of things we've been following also. If you go to the previous Euro update, I didn't have a weekly chart for you, but here's what it looks like. Well, this is last night's update, but big levels that we were talking about into the close of last year, into November, right as we were leaving. Key support was that 14.45.15 level. Remember that? The break yielded a massive drop. Two levels of interest was 129.90, was 112.90, excuse me, and 112.22. Do you guys remember that one? The 618 extension of the decline off the lows. Like, you can't make this stuff up. Here's what it looked like back on the 16th. And the previous one to that was the 11th. Okay, so this was back on November 11th, guys. We were talking about the threat if we break that major level. Two key points on the downside, 1290, 1222. Here's 1290. Here's 1222. Okay, as I was getting ready for Baby Boutros here, we were knocking on the door. Big support level, 112.12. Again, that's the 618 of the drop from the highs. You had former slope resistance. This is a long dated slope, dating all the way back to the highs you made back in close high from 2018. Oh, I'm sorry, 2008. Swing high from 2011. Here are the highs from 2014. Here are the highs from 2018. Here's the break in 2020, test of support, rally. That's a big slope. That's a big slope. And we're there now. Okay, so got a little bit of a recovery. Wouldn't be surprised even if this rallies. Again, that's dollar weakness, right? Into the 115, hopefully 1490, 1445 holds it. Still would be within the confines of the downtrend, right? In fact, that would be inflection off of downtrend support, turned resistance. On the downside, it's still 1220. So that's the break you need. Looking beyond that would be 111 and beyond. So again, anticipation that you may see with the momentum, you may see that little bit of a recovery, a little bit of a rebound before ultimately starting to get deeper in. Any questions on Euro on the weekly there? Here's what the daily chart looks like. Here's the start of the month, right at last month's extreme on the highs. We're at that last swing high from even November. Here's the pullback. There's that 1290 level. Here's key support. Extended that into 1180 into 11220 on the daily charts. It's the same levels, guys. Again, this is what it looked like back on the 11th. Here's that support. We buckled below that. There's 1290. That's still resistance. That's still resistance. That's still support. Okay, so again, last night's update. Still some room. Looking for possible downside exhaustion in the days ahead. Here's what it looks like on the intraday charts. Here's the 4-hour. Here's the 2-hour. Real granular. So just see a pullback covering last month's almost the entire range already. Don't get faked out. 618 of that rally gives you 112.64. That's just from last month's or the November, excuse me, low, right? So areas of interest, possible downside exhaustion. See how that pans out. Still need to clear 1186 on a closed basis to get the next move lower, but looking for some support here in the days ahead. Weekly open, monthly open, yearly open, resistance at 1383. All right, so looking for exhaustion on the downside. If you are holding short, it's a good point to on that stretch towards 1260 to start taking a little off the table. Bring your stops to break down or even or better. But looking for inflection a little bit lower from here. Any questions on euro? Okay. The second one, or the third update from last night, I'm just getting the wheels rolling here, is sterling. And this was actually one of the better movers. You know, I came back to look at some of these charts and euro hadn't done much. DXY was exactly in the same resistance that we left it. The only movement, in my opinion, that was worth merit, that was really big, was this rally in pound. And again, seeing is believing, guys. Here's what the pound update looked like. Again, a previous look at the update, or our last update was back on the 22nd. I didn't have a weekly chart there, but let me go back to the last one. It was right here. The big region, and again, this is November 14th, right? So a month and a half out. A big region of support was 132.15 to 133. We eyed that 50 pip zone for months, ever since the break below uptrend support here. Stalled out. This is where we left off, right? Stalled out right ahead of it. Got a little bit of recovery, slope held, and then we grinded and grinded and grinded and couldn't get through it. Here's the pullback. So fast forward a month and a half, and here's what it looks like now. We dove right into that region. And yesterday we were watching and saying, watch this slope right here. Watch the median line, where we are right now. Now, if you get into the daily charts, it's showing you a little bit clearer of a level as far as the resistance that's on hand right now, and that's 35.67, 35.77. It's the February swing low, nothing too fancy there, and a basic 38.2 of the drop. Combine that with the fact that you have the median line. So that's sort of key resistance. So looking at this, again, snapshot approach, first approach, is this a 1, 2, 3, extended 3, longest wave of the series? We're looking for a wave 4, maybe a truncated type of deal before we break out. But the point being is this is major resistance. This is near-term support. 134 is basically a 38.2 of the rally, and that swing low from September converges on that slope as well. So for sterling, right into the start of the year, I actually think this is one of the cleaner setups that's calling for further strength. If it is a 5-wave sort of stance, looking for another high if we pull back. And that would essentially mean dollar weakness. Again, don't want to put all the pieces and put a static sort of bias on this just yet. We're just getting the year started. But I think even if you get a deeper pullback here, ultimately you look for that stretch toward 35.77 before all is said and done. Questions on sterling? All right. The other update from last night was gold. I've been getting a lot of comments while I was out for people asking about gold commentary and what's been going on there. So I did want to provide that as one of our first updates. of the year, and it's been just an insane move as far as the cleanliness with the technical levels that we're watching. So a quick look. By the way, quick reminder, Friday, you have a double whammy Friday release, right? US non-farm payrolls and Canada employment. We'll take a look at Loonie in just a bit, but US non-farm payrolls expected to print at 400,000. Okay, remember we got that dismal read of 210 into the close of last year, or into the close of November. This is the December read, expecting 400, right? Unemployment's expected to downtick even more from 4.2 to 4.1. Interestingly enough, you're not seeing the labor force participation contract. It's actually at like multi-month highs. So, you know, you can always make the scenario that a contraction in labor force will artificially decrease the unemployment level, right? Because you're taking, it's a smaller sample size. As discouraged workers, essentially, if you've been looking for X amount of months, you slide off that list. You know, that doesn't seem to be happening here based on the numbers that they're providing. But somehow, anecdotally, everywhere you go, there's help wanted signs. We'll leave that at that. But at the end of the day, guys, the markets are steaming higher. Gold is seeing a large interruption. So here's what the levels look like to start off the year. Big support was 1754. We talked about that for a while. The pullback got deeper than I thought it was going to get, but we buckled back below that 52-week moving average. We dropped, and that's basically where that sell-off teetered out. 1754, the 618 of the rally. Really nice slope there as well. Very nice reaction. In fact, if you look at this on a closed basis, not even a blip, right? And it's still within a consolidation. You're seeing higher lows, you're seeing lower highs. So I do think the largest move for gold is still hasn't necessarily manifested yet. The larger picture is still constructive, while above 1754 still. But to start off the year, what do you do with this? Well, momentum's right at 50, and the weekly chart is right in the middle of a near-term range. So right here, not much to be, there's more to be desired. Now, obviously, you're sitting right above that moving average that could offer near-term support right into the 18 handle. But here's what it looks like on the daily chart. A little bit cleaner here. And here's what I showed you guys last night. So again, weekly, here's the daily. The pullback, as we noted yesterday, was coming right into near-term support. The risk, again, still for that deeper cut, you're still constructive above 1780. But at the end of the day, look at this slope. All right, 1, 2, break, acceleration, break, acceleration. We're at that pivot again. 1825, 1830, massively important resistance. Huge level. These are the close highs for July. There are the highs that you made back in August, September. Again, the acceleration on both sides keeps that pivot in focus. That's near-term resistance. Breakout is 1850. That would mark resumption of the broader uptrend. For now, you start off the year here yesterday, you drop into that slope, maybe even a little bit deeper of a drop. Look at the dollar if that gets a little bit of a kick higher. But at the end of the day, we're looking for a low. We're looking for a low ahead of that slope. 1830 is the breakout, again, targeting 1850. Here's what it looks like on the intraday. Here's a little slope I threw together yesterday. I don't know if it has much merit. Again, highlights 1783 as key support. That comes right in line with that near-term slope, basically into the close of trade on Thursday. And levels are pretty clear on the upside of what we're looking for if we do see a resumption. But long story short, you've already made a pretty hefty advance off the December low. This was big resistance. Even if it corrects lower, you're looking for an exhaustion low, ultimately for that buckle above 1830. All right. So those are the setups that I kind of just came into the market. I'll be doing, like I said in my update last night, a systematic walkthrough of all the majors and all the trade setups that we're going to be following right into the start of the month. But these are the ones that were kind of shining, or at least popping out at me yesterday. Other setups I do want to bring your attention to, but they're more on the weekly basis, right, of where we are. Here's what it looks like on the dollar yen weekly. Pretty big. All right. 1616 was a huge level. We're going through that now. I want to see how this week closes. 1616, that 116 level is the, what is that, August 2015 swing high, way back here. Beautiful pivot. You can see some major swing lows, a swing low here in January before the break ultimately saw the dropout. Again, acceleration on both sides. That level converges on the median line. Watch this week's close. Guys, I literally haven't touched this chart since last month, right? What happened? We were looking for a low off one of these two levels. Didn't really work. Halfway through, failed. But boy, here's the break. First level up. Watch the close. We're already in overbought condition. That's not a reason to fade it, but it's a reason to watch closely. If you're holding longs, chip away at that. Take a little off the table as you get through these levels, but this is a first major support, resistance from a slope standpoint. If you're looking for new exposure, there's nothing here for us just yet. Here's what it looks like on the daily chart. All right. I don't have much here except slope. Again, if you take a parallel of this, actually we're testing that pretty darn close. 1, 2, a little bit higher, maybe a little bit higher before you get there. But you get the picture. This is kind of like, you don't want to play a hero here if you're not involved. Again, even on the intraday, here's a little slope that we were following. Again, this is off the, what is this? The October 28th low, November 24th high, December lows, median line breach, support, 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 break, 75% parallel, a little bit higher, 1650s could be a choke point on this, but any way you slice it, that's a breakout of last year's range, last year's high, multi-year highs. Last time we were up here was in 2016, 2017, let's call it. Right, so pretty big move. Pretty big move. Keep an eye on that one. Dollar CAD has been a sleeper sell. Okay, this one for me, you know, the near-term price action has been decent, but looking at it as I came back from paternity leave and the holidays, we're still holding below that godforsaken resistance. If you guys remember, 29.75. It was the 2020 open, a basic 38.2 of the 2020 drop. We faltered there in August. Here's the rally in December and the pullback. If we can base out at 25.40s is a level I'm looking at. It's a 38.2 of the rally off last year, off the off last year's, off the drop, the recent drop. It's also the 52 week moving average. Good area to look for support if this thing does pull back. Now, interestingly enough, like I said, you get double whammy dollar and Canadian dollar news on Friday. Employment out of Canada is expected to show a print of 27.5 thousand. Unemployment widely expected to hold like 6%. So, look, again, it's always about the variation from, or the deviation from the expectation, but price action isn't so clean. This break into the close of last year actually would have had me looking for a pretty sizable decline. We just made, or yesterday's price action made a outside reversal off that low. And I'm not going to look too much into that just yet. We're just getting started, but it still looks like a possible exhaustion for one leg lower. And again, I'll be remapping these levels for possible entry. So look on the lookout for dollar CAD. We'll need to see if something pans out here on the near term. Last but not least, before I let you guys go, oil. Here's what the oil charts look for. Haven't touched this at all either. Oil is coming into a major area of resistance once again. It couldn't have been too long since our last oil update. Here was the 17th. Whoop. Okay. So this was published back on November 9th. And it was highlighting that 85.61 level. You guys see this? 2013 low, uptrend resistance. Guys, that was the high. Pulled back. Once we buckled back below 75, that 74.90, 77 levels, basically 75 handle, you saw a steeper drop right into confluence uptrend support. It was a perfect area to get back into the trade. Guess what? That held. We're right back at resistance. Literally, you could not have seen this play out clearer than it has now. We're at resistance once again. 77.37 is the upside of that resistance level. That converges pretty darn well with the lows that you see here in 2011, 2012, the highs that you saw in 2018, the high that you saw back in July of last year. Acceleration on both sides. This is a huge pivot. If we clear the median line to the upside, it's resumption towards 85.60. Right into the start of the year, you're at resistance. Okay, so something I'll be watching over the next couple of days to see if, in fact, we do get sort of a breakout play here, maybe into the median line, fake out some people for a pullback, or if we do clear that, it's going to be another rip. This is a huge inflection zone. So we're looking for possible topside exhaustion on the near term, ultimately to buy weakness in oil. All right. Okay. That's all I got on my list, guys. Again, I want to wish everyone a happy 2022. We got a lot to look forward to this year, especially with the price action as it pans out, as it sets up right into the start of the year. Something that you're hearing on the headlines, guys, a lot of people are talking about this move in yields. Here's the 10-year. It is a pretty big move. This is the largest yield rally to start the year that we've seen. I think the measurement was like in the last 2 decades. So it's a pretty sizable move. Even the 30-year and the longer dated maturities are still rallying. But I do have us coming into some slope resistance. A high day close from last year, 170 still upon us. We're still below that. So if you're watching CNBC or Bloomberg and you're getting super excited, chill. We still got some pretty big technical levels to beat, but it is a pretty big move. And what does that mean? It means people are moving outside the relative perceived safety of yields. They're dumping yields, price down, yields up. They're seeing that move obviously run into the S&P and all the major head indices that are continuing to move higher. Here's the SPX on the weekly chart, or excuse me, on the daily chart. The one thing that I would just keep in mind is Bitcoin. We've not seen Bitcoin kind of gain from that risk on sort of appetite. And even when gold was sort of moving that move, Bitcoin remained rather quiet. I do think there's an opportunity here. 44.32 is a level that we were talking about into the close of last year. We actually got to drive right into that on December 4th. Which failed miserably, but here we are nonetheless, kind of muttering lower, hugging that 50, what is this, the 200-day moving average. Look, at the end of the day, if you get another drop, watch 44. We kind of want to see that hold. Breakout near term would be 48.80s to see the resumptive path. But the whole story with Bitcoin being the reserve or the safety asset, there's probably merit to that. I do think you're going to see gold sort of take more of that claim this year, but looking for a low in Bitcoin in the days ahead. Okay, not bad start off the year. Guys, Happy New Year. Best of luck trading. Keep in mind, again, we have that headline data read on Friday with non-farm payrolls. So let the markets sort of digest as we get into the first few days of trade for the year. Remember, these are times where we like to sit back on the sidelines more or not. I will update you on SB whether we'll hit Thursday or not, depending on price action and where I am, as I'm still kind of settling in on my side. But great to see you all again in the room. Best of luck trading. I'll keep you updated on SB Squawk. Cheers.